Okay, so today we're looking at good to great. As in, we have good investors. We're hoping to become great investors in the stock market. So as a good investor, they follow the trend in the stock market. They don't swim against the current. But great investor, they anticipate the trend. They are able to get in the coming trend before it begins. So does anybody have, give us your understanding of what trend mean in the stock market? Are you able to hear me?
Yeah, we could hear, sir.
Yeah, I said, can anybody give us, as in what do you understand by the word trend in the stock market?
Yeah, I mean, like with what you're saying right there, I mean, as the word is the trend. So let's look at let me come in through the chart model.
Okay.
Yeah, like when you look at the chart and you see the way the market is trending, maybe you see it trending upward or you see it trending straight line, stuff like that. That actually define the move of the market in terms of people rushing to buy,
Okay.
or is the situation around or maybe political weather or stuff like that dictating the movement of the market, stuff like that. I think that's what it is.
Yes, that's what I meant.
Mm.
I think that's good. So, okay, so like today, let's look at S&P. That's the S&P 500. Are you able to see it?
Yes, sir.
Okay. So today, meaning the S&P started from like 6,000, around 6,000 and let's say 6,000, but it ended up being 6,080. So it ended up being 6,086. So that's what we mean by trend, as in, where how the market is going. So in this way, the market is going upward. Now, with a good investor, today now, somebody shouldn't say it's a good time to short the market. Short market meaning you are saying the market is going down. So based on the trend, the market is going up. So if you are going to make profit in the stock market, you should be looking at what we call long. Long meaning I'm buying a stock and I'm hoping that it's going to be going up. So if I say I'm long on this stock, it means that I'm buying it, holding it, and hoping that it's going to keep going up. But if I say I'm short, if you short a stock, you believe that it's going to be going down. But we're saying for you to make profit in the market, you should be following the trend, not going against it. So if you swim against it, meaning you're going to be losing. So today, according to this chart, for you to make profit, you should be long in it, meaning buying and hoping that it's going to go up. And it actually went up today. So that's an example of following the trend. All right, let's go back to the PowerPoint. I just want to show like the trend there. Discussion. Okay, so but when I say anticipate, how can you anticipate what will happen? I'm asking like a question now. So good investor, they follow the trend, but we said great investors should be able to anticipate what the next or the trend. As in, so how can we anticipate what is likely to happen next? Hello?
Yes, sir. Yes, sir. We there.
Oh, I asked a question. You didn't hear me?
Yeah, I couldn't hear you clearly, sir. No.
Oh. Okay, I said, can you hear clearly now?
Yes, sir.
Okay, I said, how can we anticipate the trend?
Yeah, I mean, like I mentioned before, like I mean, it depends on the things that move the market. So, like, let's say, maybe you already research on a company and you know
Okay.
the people that's in the company and what they actually planning to do. Or maybe it could be a factor of maybe like the situation that is going on right now in terms of the
Okay.
new government coming up. So there are
Yes.
some things that you could anticipate ahead of time that this was going to happen.
Okay.
So, but in itself, that's not a sleeper bullet on anything. Like maybe it's going to really gel for you on anything you want to do. But at least you have an idea that okay, market might be tending certain way because of
Okay.
this factor or because of this situation.
All right.
Yeah.
Okay, that's a good. I mean that is good. So the
Mm.
reason I moved to this screen, as in we're here, but I just want to touch on this. So like what Bravo just mentioned, that's what we call geopolitical event and election. I said they create sentiment. So sentiment is people, just as in they are excited, they started buying, or sometime when they are not excited, they started selling. But when I say sentiment, that means these people, they are not really following the fundamental of the market. They are just, as you know, they just excited based on the news. So those things do not last. As in just for a few, just for a brief moment, they don't last. That's when people are following sentiment. So Trump won the election, but some stocks that had to do with what they believe, like probably like crypto. Today, crypto is now 99,000 plus. Anybody following it? As
Oh,
in
it's the
what
Bitcoin,
Bitcoin?
right? Okay. Okay.
Bitcoin, yes.
Yeah.
Yeah, today Bitcoin already reached 99,000, so it's going to 100,000 now. So like that one, it is based that Trump won, and we believe he's going to support cryptocurrency because he wants to make America like a reserved, no, like America to be the, like the best, or what's the other word? As like, America be a leader in cryptocurrency. So people believe that is because he won. So any company that had to do with crypto, they started going up. Now, so that is sentiment. But the best way to play the market is to look for a company that had a good fundamental. So fundamental meaning the company is doing well by itself. Now, the sentiment will help the stock to go higher, but because they have good fundamental, that company is likely to last. But those that don't have good fundamental, when people start selling, they will be the one to go down first. So that's what I mean by good fundamental. All right, so next slide. Now we want to talk about how can we anticipate the next trend. So, Brother Dele, do you have any thought?
Well, the easy or the thing that I think most people that anticipate what was the question again? Sorry.
Say that again.
What was the question again? The question.
As in, I said we're now talking about how to anticipate the trend. So I'm asking you, do you have any thought? As in, what's your opinion about how to anticipate what's likely to happen?
Well, there are a couple of things that most of the time is being considered is the fact that series of consecutive higher highs. That's one. The news is
Okay.
another option. That if you see a chart or the news of certain thing is going to come into being, it's going to be a guidance to say that I think the next possibly move will be A, B, and C. So that is one of the things that, at least in what I've noticed, has helped in knowing the next move of the market.
Okay.
Yeah,
All right.
yeah. I mean, it's like Dele just mentioned. Some of the factors to consider is, we're talking about, because before it used to be like the Democrats actually focus on the EVs, right? But now you now have somebody who's saying drill stuff, right? So it could be the guy coming in and say, okay, it's all going to be gas, and my relationship with Saudi Arabia, I'm going to influence them as to the way they pump the oil out, and as well as other factor too about the interest rate being actually considered to be lower, stuff like that. So those are some stuff to actually anticipate.
All right, that is good.
Mm-hmm.
All right, so but now I want us to look at two major ways that we can anticipate what is likely to happen. So when we talk about the stock market, there is no certainty. We are dealing with probability. Okay. So when I buy a stock, I cannot tell you that at 100% guarantee this stock is going up. I will say it is likely to go up. If I am right, this is what will happen. So in the stock market, we don't need to say, I am right, I'm wrong. You should always say, the probability of this going up is higher, the probability of this going down is no. But there's no 100%, there's no guarantee, there's no certainty in the stock market. We play with probability. But when the probability is stacked in our favor, then we make money. So two ways that we can anticipate trend in stock market is what we call market cycle. So when we say market cycle, what's your understanding of market cycle? Anybody? Are you able to hear me?
Yes, sir. Yeah. Maybe you could shed light on it for us, sir. Yeah.
Okay. Oh, I said, what's your understanding of market cycle?
Yeah, I mean, you could shed light on it because I really don't really know. Yeah.
Oh, okay. That's good.
Yeah.
Yeah. Good evening. So, may I?
Go ahead.
Yeah, if I understand, I think when you ask, the question market cycle, it's more like past trends, or when you normally would see like a wave-like structure, which is like the crest. So you could anticipate when it gets to this point, the likelihood is going to dip again or rise again. That's what I understand the question to be.
That is good. So in market cycle, there is when the market is expanding, that's what we call expansion. And there is time that the market will be contracting, which is contraction. So let me give an example. So there are two major things that determine this, like the trend. There are other things like the one Brother Dele mentioned, and what Brother Bolu mentioned, that's like the election. But those ones, they create sentiment. So the major thing that actually determines the cycle or the trend in the market is what we call market cycle and sector rotation. These are the two major things, the market cycle and sectors rotation. All right, so market cycle, it has to do with interest rate. So like from 2022 to 2023, the Fed, they started increasing the interest rate. So that is contraction. That is, in 2020, there was a pandemic. No, the government printed more money. That resulted in inflation. So people were excited, government gave us money. People started buying stock. So the market started going up all the way to 2022. But later, the Fed, they will consider it. Okay, inflation was about 9% in 2022. So that was a time for them to start contracting the cycle again. Then they started increasing the interest rate all the way to July of 2023. So increasing the interest rate is going to cause contraction. Contraction meaning business, they will not be excited to borrow money because the interest rate is so high. So the income that is coming in will be reducing. So that's contraction.
Okay.
But somebody want to say something?
No, sir. Go ahead, Sam.
Okay. So, but 2023 July all the way to September of 2024, the Fed, they hold the interest rate steady, meaning they were not increasing, neither were they increasing it. So they allow it to do its work for like 1 year and 2 months. So the inflation rate now is around 2 point something to 3%. So from September of this year, they started cutting the interest rate. So people will get excited. So now we are beginning what we call market expansion because the Fed, they are reducing the interest rate. So company now like Amazon, Facebook, it will now be easier for them to borrow money and start expanding their businesses. So that's what makes the market, as you know, when the the Fed, when they start reducing the interest rate, then the company will start expanding. So they are earning, that how much they are making will start increasing, then people will be excited and start buying stock. So that's why the stock is going up at this point. So we are in expansion now. Any questions?
Okay. So does it have to be only when you talk about cycle, is it majorly on interest rate influence, or it could be another factor that actually make the cycle create the cycle?
Yes, that's what I said. I said majorly.
Okay.
Two factor. So other than geopolitical, there's election, there is something happening in the Middle East. But so all those, we said those, they create sentiment. Many people just playing with psychology of people, how people think. But majorly what determines the trend is the market cycle. That's increasing interest rate or cutting interest rate. And the next one is what we call sector rotation. So
Yeah.
sector rotation, there are 11 sectors. Then the big money, when I say big money, the hedge fund, people that have trillions of dollars under their management, they move the money around. So that also moved the market. So does anybody have understanding of what I mean by sector rotation?
Yeah.
And can you give us your understanding of what sectors rotation mean?
No, you make mention of a different category right now. You talk about the was it geopolitical?
Okay.
Yeah, then you talk about other factor too in regards to the interest rates, all right? And those are the things like actually, so those are the things that are actually move or influence the way the market move, right?
Okay.
Yeah.
Yes. Mhm.
So in that regard, you're talking about different category of what's it called mover. So you talk about like maybe event happening in what's it called maybe politically move the market, then issue regarding the interest rate move the market. So two sector right there, right? Then
Okay, when let me quickly show us what I mean by sector. Okay, so the first one is interest rate. That create contraction and expansion. That is market cycle.
Okay.
Then the next one is what we call sector rotation. So when you go to FinVis, you will expand this and touch group.
Okay, got it.
Group.
Yeah.
Somebody said something.
No. I see what you're saying right there. Yeah.
Oh,
So
okay. So this group, there are 11 sectors. All right, come on. All right, so there are 11 sectors. We have technology, consumer, communication, industry, utility, consumer defense, healthcare, financial, real estate, basic material, and energy. So these 11, these are the major sector that we have. Now, these things show you how the big money, when I say big money, people that have billions, hedge fund, or trillions of dollars under their management, this is how they are doing today. So this one will tell you. Question? Oh, do you have
Hold on a
question?
second. Which sector is the one that is the top one? I can't see the sector that is the higher one. Or technology.
Okay. So technology, that tells you that Tesla, Amazon, Facebook, Apple, Microsoft, Google, they are all doing fine today. That's technology.
Okay.
Okay, so this will tell you what happened today. Then it means energy, like Exxon, Chevron. It means today they are not doing fine. That's why energy is the lowest down here. Then let's now move to 1 week. What happened in 1 week? So in 1 week, technology is still doing fine. Real estate, energy, utility, they are still down here. So now this tells you how the sector are moving. But sometimes it will be, as in technology was down like last week. So a month ago, technology wasn't the leader. This is the second here. That time was consumer. That's like Walmart, Target, all of that are doing fine. But when you look at it, it can tell you what is going on. So based on this, I could determine, or no, like I said, there is no 100% guarantee, but based on this, I can project what's likely to happen in the next 10 weeks. Usually the rotation takes about 10 weeks. That's the 50-day moving average. But this is where I come to see what they are doing, then I can make my projection of what will happen. So we have 10 weeks, which is 50 moving average. We have 20 days moving average, which is 1 month. Then we have 200 moving average, which is 6 months. So based on this, I will be able to project what's likely to happen. Do we have any question before I get out of this one?
So basically, for somebody like that that's trying to look for a good place to invest in, we can use the sector to help us to be a guidance, such as, for instance, we know for the 1 month we have the technology doing well. So it's a good idea. Is it correct to just consider investing in the technology sector
All right, so
other than the
once you
energy
look
sector?
at technology sector, then if you have knowledge of company that belong there, if you don't, then you just come up here, the screener, okay, this one says, I don't want to touch it, there is screener. Once you touch the screener, then you could put technology there, and then it will give you a list of the company that belong to technology. Is that your question or your explanation?
I was just saying, it was just like, this makes sense that once you look at it could be a guidance to say that, hey, I'm investing over a long period of time, or 1 month or 3 months. The sector that is going well is where I want to be at. So that's an idea of saying that, hey, I want to be in the financial, I want to be in the, so it gives an idea. I just think was loud that that's
Okay,
another
okay,
option.
but now what I'm saying is that good investor, they will be in this sector that is doing fine. But
Okay.
great investor should be able to anticipate it. Anticipate meaning I'm ready to get in. So today now, if I buy technology, it doesn't mean that I'm making money. It has already happened. Meaning like at the end of today, I buy this technology. Tomorrow it may start going down. So that's a good investor. But I said great investor is able to anticipate. So last week, last Sunday, I was talking to somebody at work. Then I showed the person why technology will become the next mover. So that means I could anticipate last week. It hasn't happened already, but I was able to explain to that person why the next buy should be technology. So I'm saying, I could anticipate this thing before it happened because I'm following it every day. Is that understood?
Yes, sir. Yes.
Okay. As in today, technology, but me, since last Sunday, I already explained to somebody at work that if that person is ready to buy, why Microsoft or Google should be what the person should buy. But meaning today, now if the person actually bought it Sunday, then that person will be happy. I didn't have to buy, but I'm just saying I could anticipate and explain to people what the next move uh, will be. Okay, so let's go back to the chat. I'll run through it and we can just discuss. So two major ways that the market move is market cycle expansion and contraction, then sector rotation have shown us how to check the sector. But if you are checking it every day, then you'll be able to project what the next move is likely. Not 100% sure, but most of the time, 9 out of 10. As in 9 out of 10, I do get it right. As in, no. All right, so interest rate and earning. Those are the things moving the market. But we said like election, geopolitical, those just create sentiment. It moved the market, but that's not the fundamental move or mover. And lastly, I want to talk about market positioning. So there are some stock that I'm watching, I don't buy them. I'm just looking at what's happening to them. So I'm paying attention to what's happening to them to see if they are worth buying. Then I will now move to a time that I really have enough reason to buy, I will buy. Then there is what I call holding. So are you able to see my example for holding?
Yes, you
Hello?
good. Yes.
Okay. So when we started like a month ago, Brother Dele, do you remember what the price of hood was?
No, I can check them.
Okay, no, I say a month ago.
No, I don't.
Okay,
No, I don't.
it was $23, okay? So I said I bought hood. I'm expecting that it's gonna get to 38. But that doesn't mean I continue to buy it, even though I believe or I anticipated that it's gonna get to 38. So today it's 40 already now today. As in it's 40. But a month ago I anticipated that it's gonna get to 38 and I gave the explanation of the reason behind it. But I'm just showing out that I bought it when it was 17 all the way to 22.50. So when it turned to 22.50, I stopped buying, but I didn't sell. So believing that a stock is going up does not mean you have to be buying it. So you could be holding it. So my mind, as in my own anticipation, was I will hold it all the way to 38. I said when it get to 38, then I will decide what to do with it. It's 38 already, like last week. But the movement, it went all the way to 29. And when they report how the company is doing, because they missed their earning by 1 cent, it went down to 23. But I didn't sell. Why? Because I have enough reason to believe that it will get to 38. So it went from 29, it went down to 23, but I still held on to it. But as of today, it's 40 point something already. So I'm like 97% profit, as in so I bought it. So my average is 20, but today is 40. Okay, no, that's 100%. So meaning if I spend 5,000 on that stock today, my money will be 10,000. So I'm just showing us holding it doesn't mean I'm buying. Even though I believe it's gonna get to 38, I stop buying at 22.50. That's what I call margin of safety. Margin of safety, meaning for whatever happens, I will not lose. So it went all the way to 29. For 29, it went down to 23. But since my own average is $20, I don't have to panic. I still have $3 profit on each share that I have. But for 23, it went all the way back to 38, but today is 40. So meaning you could be holding a stock that you are not buying anymore, but you believe it's gonna go up. But believing that it's gonna go up doesn't mean you should be buying. Because if you buy, your average goes up, then if something happens, you'll be panicking. So for you not to panic, is what we call margin of safety. You hold it, you know it's gonna go up, but you don't need to keep buying. Now at one point, then you have to sell when you believe that this stock has reached the highest for whatever reason. So that's the time you sell. All right, so now I will end the recording, then we'll just talk as if you have any question for me.